Hi, this is Anthony Parent of IRS-Medic, and we're about to get going on today's show. But before I do so, if people ask me, hey, how can I support this channel? And really, the best way to support this channel is if you need tax prep for 2024, you're a non-resident alien, you need prep, streamlined, go to irsmedic.com. Or if you just want to email my right-hand man, Daniel Iea, at DIA at IRSMedic.com. We have premium services, and we'll give you options on foreign mutual funds. Only PFICs are PFICs. Let's pay attention to that. Along with treaty positions, and we've done more OVDP penalty opt-outs than I don't know any other firm I know. We enjoy difficult cases, and that's why we can offer audit protection, because we test our theories, and we're battle tested, and we'll also give you business and tax advisory. So with that, let's get into the show. We are going to be talking about tax traps for digital nomads and expats, and we're going to go over, and there's actually a bigger trap that we're going to kind of show and sort of the evolution of this. But I would say, and I was thinking about this because I actually got a lot of attention on Facebook when I just posted it on my personal account. And, this is a really intriguing topic to people because, look, if you're an American living overseas and not paying taxes, this sounds pretty good, especially when you're dealing with April weather that we are in Connecticut here. I got to say, those beaches overseas in Mexico sounds mighty fine right about now. And I think there's always a lot of interest in it. But usually there's typical things that will keep us where we are. But there's a lot of people who are interested, like, okay, I want to live overseas. And, hey, I heard there's a way to avoid federal taxes. So we're going to get into that. But we're also going to get into sort of the evolution of how people come from digital nomads to something else and sort of the problems that come up along the way. We're going to go over these topics for people not familiar with the channel, okay? Then we're going to take a deeper dive, and John's got a deeper dive in some of these issues. We're going to get into that too. So for those of you who do like some of the technical explanations, we'll get to that. And we're going to cover some pitfalls and talk probably a little bit about whatever Donald Trump is doing. I'm not entirely sure. We were promised an end to double taxation for Americans overseas, and that doesn't seem to be happening. So not sure exactly. So let's get into it. I'm Anthony Parent. I'm a 20-year tax attorney. I've been doing this a while. Again, I do really enjoy doing the tough cases. I started this firm with my dad, and we just were a great team. He's got a lot of integrity, but the ability, the stamina to handle the analysis of analyzing what the law actually is. And that's probably why I enjoy, even though John's much younger than my dad, so much of our discussions, because it does remind me so much of the work I used to do with my dad, sitting down and figuring out solutions, which was always a lot of fun. We have with us, okay, also the formidable Keith Redmond. He is the expat advocate. Really, welcome, Keith. How do you like that?
I love the adjective. Thank you.
All right. And then now let's go on to the great John, the one and only, the great John Richardson.
He gets two adjectives.
He gets two, right? Hey, good morning, John. You excited about this?
It'll be interesting.
Yeah, it's going to be fun. All right. So we're here. So let's go over, talk about, and what John's going to be talking about, he has his slides. He's really going to get like, what is a digital nomad? What do we need about it? So we're going to do a little bit of overview for like the common things that people get surprised by. Hey, I don't know anything about international taxation. Okay, so we're going to cover that here. What are state residency traps? Oh, Keith, I didn't ask you. I didn't ask you if I could get your opinion on that. Are you comfortable sharing your story?
What
with
Maryland?
Mean? With Maryland?
Oh, sure.
Oh, great. So Keith is going
to. If I may interject, this is going to be a good podcast for me as well, because I don't know much about digital nomads, so I'm going to be learning as well.
Well, I think you do, but you know digital nomads in their advanced stage. So yeah, and it kind of makes sense today, everything happening. So thanks for interjecting on that. We're going to go over the foreign investment risk, and there's a bunch of things going on in there, and then the foreign earned income exclusion, myths versus reality, and then we'll just give you some practical compliance tips. Then we'll get into John's details, and the practical compliance tips. We're going to get into John's details on that. Okay. So this is what I was just talking about before, the state residency traps. Keith, you want to tell us your story? Where you grew up in Maryland, right?
Yeah, out in the Annapolis area. So, well, my situation, I don't know if it's applicable, but I will share it nevertheless. I came back to the States temporarily to take care of my mom and so forth. Okay. And I received a notice from the state of Maryland, the comptroller, that I owed back taxes with the state of Maryland because they said that I'm a resident of Maryland. And I sent them all the documentation to show that no, for the years in question, I was actually a resident of France. I sent them everything, everything. They
Okay.
still would not accept it at all. And I could not figure out why they were coming after me. Well, long story short, the reason why they were coming after me, even though they were saying, you're still a resident of the state of Maryland, and that's the way it is. What had happened is the family accountant was moving offices, and he blanket across the board filed extensions on everyone, including me. And you see
Oh,
what I mean? And because he filed an extension in error, the comptroller, the tax revenue office in the state of Maryland made the assumption that I've always been living in Maryland, even though I had documentation that I was living in France. So I had to have the family accountant send a letter apologizing for the error. And then they finally rescinded that I owed all these back taxes. Now,
oh
that's not
my.
so well. I mean, that's not so much applicable to this situation, but what is applicable is that you have to be very careful. You have to be very careful in certain states, and Maryland is one of them. They will try to come after you. And I spoke to the number 2 guy in the comptroller's office, and he said to me, be very careful how you vote. Don't vote down ballot. Just vote for president, governor,
Oh,
and senator, and for your local representative. Never vote for referendums or any local city council or anything of that sort, because that could indicate that you are tied to the state of Maryland.
oh my. That is
Yeah.
incredible advice. Yeah, thank you, Keith. That's an incredible story, and that's a really great advice. So be careful. It's
Well,
unfortunate
be
that
careful. Last point on that, I don't want to miss it.
Yeah,
Be careful because what he was referring to was if you're voting absentee ballot, be very
yeah.
careful. Very careful.
I didn't even know about that. That's incredible. Now, I would say this, in my experience, the states that are most reluctant to give you up are Maryland, Virginia, New York, and California. And
Yeah.
California can be really tough. And I mean, there's a whole legal industry created over California residency. Seriously, there's a bunch of attorneys in California who specialize in proving that you are not actually in California. California does not want to give you up, and that's a really good point. I would
And
imagine they would look at your voting records. One
yeah,
solution,
I
and
will have to say, I'm sorry
yeah,
to interject, but the great John Richardson really helped me with it because he
did
wrote up
he?
something. Yes, he did. My hat's
Oh.
off to him. I'm very grateful.
Oh, John, that's amazing. All right. Well, and I would say this, if you're looking for one rock solid way to just sort of avoid these entanglements, let's say that you live in California and you're going to become a digital nomad and I'm going to leave, but I don't want California to hide me. One thing you can do is domicile in South Dakota. I've researched it for a bunch of clients and months of clients have done it. South Dakota, to me, is the number one place to go because it's something you can do in a day. And really, you never really have to go back unless you need a driver's license, which I think is every 5 to 10 days, somewhere, I think every 8 years or something like that. So South Dakota just sort of locks you in. They have South Dakota has a very favorable nomad law that is particular for people traveling the country on RVs. Well, hey, look, if you're a digital nomad overseas, it works just as good. And I talked to them. They said, yep, it works great. And my clients are really happy with that. So that's one thing I would say.
South Dakota?
South Dakota, the other ones that you could get somewhere else, but South Dakota has a whole package set up.
Oh,
So that's why I would say that's, you could do it in other places and, kind of get there. But if you're looking to make it like, okay, we're going to have no question. And then you have a U.S. mailing address. So it can make it a little easier for dealing with your mail too. So that's kind of what I would recommend. And they'll do a mail forward there. And it's a real address. It's not a forwarding. So it's known as a real address. So that's what I would say. South Dakota could really be the place to go if you're looking to do that. So now I want to get into the foreign investment risks. And this is sort of stuff that really doesn't affect a lot of digital nomads, because I'm thinking, because this is where I'm thinking of. I'm looking at, guys, I'm looking at the whole evolution. Someone in their 20s or 30s says, you know what, I want to see the world. I want to be a digital nomad. I have a tether back to the United States of America, remote job. Okay, I'm going to live overseas, and now I can avoid federal taxation on that income. So it's a great way. Being a digital nomad is a great way to dip your toe into the international living. But what happens is life happens. Life happens, and the chances of you finding a non-US spouse are incredibly large overseas, and you know that, That could even be one of your motivations for living overseas. I see right through you.
I did it
right?
twice.
Oh yeah. So this is the thing. So for most digital nomads, and this is what we've talked about on this channel, if your financial center of gravity is in the United States of America, look, this is a great deal. It's a great deal. But it's as you start to put down roots as a digital nomad, hey, you were hanging out in a country a little too long because you fell in love. This is where things go, wrong. And then when you have a foreign employer with a foreign pension, this is where it gets a little crazy. So we can talk a little bit about this, but that's really where it happens. So a lot of this, this is the thing. If you want to go overseas, a lot of this you don't need to think about. You really don't until you settle your life overseas. So when you're no longer that nomad, but you're overseas, and I would say that's the evolution from nomad to US expat, because a lot of nomads don't understand any of these problems we have, because they don't even have bank accounts overseas. And if they do, they're small. What you're going to find, though, as you get into the foreign investments, that's where things are going to get a little bit crazy and way out of control. And then you'll also see a ton of different tax treatments on various things all over the tax industry. They're going to be all over the place. And then you'll see people complaining about their tax preparation bill being in the thousands of dollars. And it is. There's also the problem of doing things. Now, John, we're going to cover a little bit more of this in your presentation, or should we talk about sort of a little briefly about the mutual funds?
Go ahead. I mean, my view of it, Anthony, is that digital nomads should have absolutely no affiliation with any foreign account of any kind. So,
and that's a great way to frame it. Thank you, John. Thank you. And so that's the thing. You're a digital nomad. Before you invest in anything overseas, really talk to a tax advisor, because it could scare you. If you're investing a lot, the compliance cost can be worth it. But if you're not investing all that much, you might just be in a situation where, that's not worth it. And the tax code is designed to keep your you can work overseas, but the government wants your investments in the U.S. So that's really way. So thank you, John. And that's what I would say. So foreign mutual funds, retirement plans, even investing in businesses, you gotta really, before you do that, you gotta talk to someone. And we just won't get into that all that much now. We got a lot to cover today. Now, and John, this is what you're going to be going into a bit in your presentation, really the foreign earned income exclusion, how to qualify. And, one thing that I do want to talk about, because this is also often the thing that comes up. It's like, well, I make all my money through passive income, but I live overseas and I want to avoid paying taxes. Well, then what I'll tell the person is like, well, then you have to apply foreign tax credits. But Anthony, I live in a low tax jurisdiction. There's no foreign tax credits to apply. So in that case, when you have passive income, what you typically want to do is structure something so that money flows into an entity that can pay you wages, but then there could be a downside. So this is really where you get into really, really advanced planning, where we really have to sit down and crunch the numbers with the client to figure that out. That's what I'm saying. If you're like, well, I don't have wages, and that's really the number one thing. You have to have wages. If it's not wages, it doesn't apply. And again, most people think it has to be wages from a foreign source. No, it doesn't. Because John, who created this law in the first place, right?
So it's earned income, right? So wage or self-employment income.
Right.
So if the work is performed outside the United States, it's foreign source.
That's right. The work is performed outside. So that's probably one of the biggest surprises. A lot of people don't know they can qualify for it because it's So that's probably the biggest that's probably the biggest myth and behind it. And let's see. All right, let's move on. We got to get a lot of stuff now. Now this is going to be for Keith. This is the practical, because this Keith, this is you, right? This is you. Really the practical solutions. Well,
Yeah.
because look, if you're a digital nomad and you just started, it's it's not that hard to get things done right as a simple digital nomad with your financial center of gravity in the United States. It's really, what are the tips for 2025? What are the things that you want to avoid as a digital nomad?
Yeah.
Would you say marrying a non-US spouse?
Well, yeah, that's a little, I mean, I think that's a little problematic to do
Yeah.
so. And I don't know, maybe John has some input on this. To be honest with you, if I was a digital nomad and I'm living outside the United States, I would just err on the side of caution and never vote. I would not vote at all. I would think long and hard as far as marrying a non-US citizen until you kind of get your life straightened out. Because, correct me if I'm wrong, but being a digital nomad for a long period of time to try to accumulate wealth and assets can be problematic. Would you say?
Well, you know what? Yeah, Keith, and thank you. Thank you. That gets me to my point. And I would say this is what I would say before you marry a non-US spouse. You need to get some real advice from a tax counsel, and even you might have issues. You might even need an estate plan in the United States. You do not want to do this. Look, we've been talking about a couple times. We've been talking about the Doug Edelman indictment, and even though look, that was I think a political target. So there probably couldn't be too much he could have done to avoid it. But the point is that the IRS, and this is the thing, you don't need criminal charges. That in that case you have criminal charges, but the IRS usually works by civil penalties. And so you don't need to be charged criminally for the IRS to make your marriage very, very difficult. They'll look for things and they want information, and you really want to get some tax advice before you marry a non-US spouse, and it's something that we help people out with all the time. So I would say that's really the thing. Before you make any big changes to your life as a digital nomad, and it's like, if you're just going to continue as is, okay, that's good. But as you put those roots down, that's when you better watch out. And I think that's the best way to go. Otherwise, it's kind of going along, right? All right. So yeah, and this is kind of what I wanted to talk about is that this really matters because I think there's more and more digital nomads now than ever. I don't know the number, but do you guys have any idea if they've increased or by any amount? I mean, to me, it seems like we have a lot more digital nomads than ever before as clients. It seems like it's growing, and it seems like it will because it really, and I would say Mexico is. There's a lot of Americans in Mexico, more parts, So
I guess I have a skewed view, and I have to go by you guys because all the people with whom I've spoken over these years who've sought my assistance and so forth, I haven't come across any digital nomads who come to me. So
well, Keith, and I think you wouldn't. I wouldn't expect you to because and I was talking before last time. I look at your Facebook group as more of as a support group for people who marry non-US spouses. That's really because 80% of most of your calls involve that. And so that's why
it's a rarity that I have an American who's married to another American. It does occur, but it's a rarity.
Right. And those are the clients we have. We have a lot of clients with, who have married a non-US spouse. It's very common. And that's really where I think we get into the dichotomy between people who get the brunt of the U.S. taxation, those who don't complain about it, like U.S. retirees. For them, what are you talking about? I'm living overseas, and you guys, the tax code's fine. And they'll say, what's your problem? It's when you start to move and start to do things start to actually have a life outside the United States of America that it gets there. So that's why I would say, and we're going to see more digital nomads, and we're going to see more of the problems because I'm not sure. Now, Donald Trump did promise to end double taxation for Americans overseas. A lot of talk about everything but that right now. So I'm not sure really what's going to happen with that. So I think we just kind of have to plan on the status quo being the status quo. Let's see here. Now, okay, this is where I want to insert John's slides. So let me get John's slides and switch out here. Just take me 1 second to do that, a few moments. Now, we're going to get a little bit more deeper into what the for how the foreign earned income exclusion works, and really what a digital nomad is. So here we go. The great John Richardson. So good morning, John. This is it. So here we go. Let's go. Digital nomads work remotely, but are not necessarily remote workers. Ooh, I like this one. Oh, this is great, John. All right. Here you go, John. Take it away.
Do you want to pause and see if anybody has any general questions before we get into it?
I don't see any questions. Yeah. So by the way, if you have any general questions, put them right there. We like to get these questions live. If you just want to say hello, we'd like to see who's on here. So nothing yet. We'll let you know if we get some.
All right. So I looked at your description of the thing, and you're talking about remote workers. You're talking about digital nomads. We've been talking about all of this from the perspective of the individual who decides to leave the United States and do some kind of work or, be somewhere else, right? I think it's worth pointing out, though, that this is primarily, all right, people who are self-employed. Because if you're an employee of a company and you are doing your work outside the United States, there's always a risk of that being treated as a permanent establishment, okay, under the tax laws, which would bring the company itself into, various tax problems, right? So the reason I mention that is that, I see a lot of using the words remote worker and digital nomad interchangeably, and I don't have the case. I think the remote worker, you're probably better off viewing the remote worker as somebody who's employed by a company and does the work outside the United States. Now, that kind of person will have the same issues from their perspective, right, as the digital nomad. But, I think that the companies need to be very, very careful, right? Because if that meets the permanent establishment test under these treaties, right, then all of a sudden the company's taxable, which they're not going to like at all. So, this is it's probably a bigger issue, although a side issue in our discussion. But I just want to explain why I don't think that remote workers and digital nomads, I don't think those are interchangeable terms at all.
Thank you, John. No, I do agree with you. Right. It is. There's that distinction. So wonderful. Okay.
So what's a digital nomad? Well, I don't know. Okay. I mean, I tried to come up with a definition. A person from country A who has a physical presence in country B, has location independent self-employment income, and may or may not be taxable in either country A or country B on that income. So, I mean, they're easy to recognize, maybe harder to define, but, we have sort of the stereotypical, I don't know, go to the next slide. I think I've got some examples of who these, people might be. They don't, you use the word digital nomad, they don't necessarily have to be doing computer work. English teachers abroad, right?
There's a lot. Yeah, that's big.
They're not, if they're doing live classes, they're probably not, don't think of themselves as digital nomads. But, it's the same sort of issue. So basically, though, you have to understand there's both immigration and tax issues. So, the first issue is are they allowed to be in the country at all doing anything, right? And that's an immigration issue. The second question is if they're allowed to be in the country, they are allowed to be doing what they're doing, this sort of stuff, right? And so there's a wide range of immigration issues. However, the world has generally become much more welcoming, okay, to this group of people. And I provided a link later on. I don't know if any of this is true, but some guy wrote an article saying there's something like 66 digital nomad visas specifically in the world now. I don't know if that's true. Interestingly, I do know that Canada has one, whatever. But so that's the immigration. And most people don't think a lot about that because, they're either there and they presume they're legally or they can't get in. So there's no reason to think about it anymore. So the tax issues then become, front and center for those who are concerned about that, right? So in other words, we need to get used to the difference between immigration issues and tax issues, okay? And I mean, you can, be in a country legally and not be taxable. You can be in a country legally and be taxable, et cetera. So next. All right, I think I've covered that. Just a minute.
All right. Yep. You got that. Okay, great. You get that.
Okay. Again, tax residency is the name of the game, and different countries have different rules for what it means to be a tax resident, how long you're there, et cetera, et cetera. Okay. Now, I just want to make one point that goes back to other presentations that we have done. There's a huge distinction between being a tax resident of a country and what income the country will tax you on, right? So, for example, you can be a tax resident of Mexico, no problem, but not be taxable on your U.S. Social Security, for example, right? Or,
right.
So I mean, there are all these issues. Anyway, next. Okay. Now you covered this, Anthony. I mean, you started talking about the state tax issues. This is a big issue. Okay?
Oh yeah, Massachusetts. I forgot about Massachusetts.
Well,
yeah,
whatever.
Yeah.
It's a big issue.
Yeah.
And I think your advice of moving out of California somewhere first to another state, maybe Florida, I mean, it doesn't have, or others, right, that don't have state income tax.
Yeah, and I do recall, I think the cost to do so, and this is what, if you're just kind of comparing, all right, is this really going to be worth it? You have to fly into there's the airport near Mount Rushmore. You have to go there, so you can go visit Mount Rushmore and then kind of get this done at the same time. The DMV, I'm told, is a very, very efficient Department of Motor Vehicles, and I think a cost is under $2,000 to do this, and not a terrible cost each year. And just to deal with the state of California again, there's an entire legal industry.
I know.
So think about that. Yeah,
I've worked with that problem with people.
Oh, okay. All right. Oh, wow. All right.
Now, so a moment ago, don't go back to the previous slide, but what we all know, right, that U.S. citizens, because they're U.S. citizens, are tax residents of the United States, right?
Right.
So what's important to understand about that is that a U.S. citizen can never sever tax residency with the United States.
Yeah. So what John's saying is that if you are a U.S. person, no matter where you live, you are still a tax resident of the United States.
Yeah.
No matter where it could be on Mars, you're a tax resident of the United States.
Green card holder or citizen. Now, I want to pause again to sort of pave the way for where we're going with this. Once again, there's a difference between being a tax resident and whether you're taxable on certain kinds of income. You can see where I'm going with this, right? U.S. tax residents can use the Foreign Earned Income Exclusion to exclude, right? But I want to compare that. So a U.S. citizen, digital nomad, will never sever tax residency with the United States. But by way of comparison, let's look at Canada, and you could substitute British, French, anything.
Any color, yeah, anything, yeah.
Because these are countries that tax based on residency, right? And
every other country in the world.
Yeah, and if you want to leave Canada, and if you want to sever tax, you have to sever tax residency with Canada. And I've got to tell you that is not the easiest thing to do without becoming a tax resident of another country, right? Now, I have no idea what the level of compliance with this stuff is, right? But what I do know is that one of the tests that Canada will look at to see if you have severed tax residency, of course, is whether you're a tax resident of another country, or they'll look to a treaty. Is there a treaty that would allow you to sever tax residence? But the problem is you can't use the treaty unless you're a tax resident of the other country, right? So Canadian digital nomads, I think, are very, very susceptible to remaining Canadian tax residents, okay? When they leave. So it's very interesting that, U.S. citizenship is better. All right. I think for being a digital nomad. But anyway.
Well, your question cracks me up. Can a digital nomad have a permanent home? I'll just end it there, right? Can a nomad have a permanent home?
Well, the point is to avoid it, right? Because they're trying to avoid tax residency. And this also has implications for how the Foreign Earned Income Exclusion claim is made. But anyway, so here we are with this, right? And it is interesting how U.S. citizenship and the permanence of U.S. tax residency, along with the Foreign Earned Income Exclusion, actually puts U.S. citizen digital nomads, I think, in a better place than their, Canadian counterparts, who live 50 miles away or something. But anyway, okay, next. Okay, so again, tax residency allows them to tax you. That's a different question from what are you taxed on, right? So most countries, if you're a tax resident, will tax you on your worldwide income from all sources. There are, however, some countries that are territorial tax systems where they'll tax you on income only sourced within the country. And, you've probably read from time to time all these, I don't know what these people call this stuff, four flags theory, or, this sort of stuff, right? Where you separate everything. And usually you'll find that territorial taxation is part of that, right? In other words, tax resident, make your income somewhere else, this sort of stuff, right? But anyway, next. Okay, so we're talking about U.S. citizens primarily here, and let's review. They're always taxable by the United States wherever they go, okay? Only way is in being a U.S. citizen. They're sometimes taxable by the country where they spend time as digital nomads if they meet the rules for tax residency. Okay, sometimes yes, sometimes no. Many years ago, I was at a conference of digital nomads, and there were all these discussions of, they make sure that they leave the country, before they reach a certain day count, et cetera, et cetera. But the key to understanding this stuff is how income is sourced, right? So under the Internal Revenue Code, income is sourced to where the work is done. Okay, so if you're doing your work in Thailand or Indonesia or wherever, that's foreign source income from a U.S. point of view. Why is that important? Because you're not using the Foreign Earned Income Exclusion unless it's foreign income. Agreed? Okay.
Yep. Yeah.
So next.
Perfect there, John. Thank you.
Now let's look at this Foreign Earned Income Exclusion. And this is not a 30,000 foot view. This is a 50,000 foot view, because this is a lot more complicated than, the way people describe it. But in a very, very general sense, okay, Section 911 of the Internal Revenue Code allows a U.S. citizen, okay, to exclude up to, I think it's about 130,000 of income every year. It's and I don't want to get into the housing thing. Okay, let's keep this very simple.
Yeah.
So there's an exclusion. Now, I do want to make the point, right? You were talking about passive income and stuff earlier, that this applies to earned income. And earned income means either salary, where it means self-employment. But if it's self-employment, it's a little more complicated.
Yes.
You have to reduce a certain amount for capital expenditure. But in any case, now, the Section 911 provides two bases, okay, for being able to use this. The first is bona fide residence in another country. Well, Anthony, is a digital nomad going to represent themselves to be a bona fide resident of another country?
No.
I don't think so. That's exactly right. So what they're using is the head that says that if you're spending more than 330 days a year outside the United States.
Right.
Okay.
Right. And yeah, bona fide residents can use different rules too. But yeah, if you're a nomad, you're claiming
you're not going to claim.
You're not going to claim that, right? So really, you're going to have.
Yeah.
This
You want simplicity,
Yeah.
et cetera. And by the way, there are other rules. Not having an abode in the United States. It's not as simple as just outside the United States, sitting on a beach making money. It's not as simple as that. I recall sometime earlier, maybe you want to pull it out. We did a session on the Foreign Earned Income Exclusion. I don't remember. I remember doing it, but I don't remember.
Oh yeah, we've done some. Yeah, I could probably get that link up. So yeah.
Yeah, I mean, you could pull that up. Okay, but look. So here's the bottom line, right? If a U.S. citizen is somehow employed, fine. If they're self-employed, fine. They can exclude the income in a general sense. But the U.S. also has Social Security taxes, right? Self-employment taxes. So you're not going to escape U.S. taxation in its totality because of the self-employment taxes, right? And these are not really small taxes. As I recall, they're, what, around 15% or something like that. So this is an issue. All right. Now, of course, we can get into the wrinkles and, this, that, and the other thing. But the key point to understand is that the use of the Foreign Earned Income Exclusion does not exempt somebody from Social Security taxes. Okay. All right. So, you can mitigate it. You're not going to get out of it completely unless, let's go to the next slide. Oh, and by the way, okay, so I don't think that this is going to have a lot of applicabilities to digital nomads. If you're not eligible for the Foreign Earned Income Exclusion, you can mitigate U.S. tax with foreign tax credits, but I don't think that's the world of the digital nomad.
Yeah, because
Okay,
they're not paying.
moving on here.
Yeah.
Moving on here. Now, avoiding the U.S. self-employment tax. Now, before I explain this, I want to tell you what I really think about this. Okay. Probably over these sessions, you've learned that I like things simple. I don't like complexity. I don't like compliance costs. I can't stand any of that stuff. In fact, I'm the kind of person who would probably pay to avoid it. But there is an industry out there. There's a certain mindset people who kind of get off on going to create foreign corporate. Oh my God, this is so exciting. All you're doing is just creating one more problem to deal with in your life. But okay. So what some people will do or have done in the past to eliminate self-employment taxes, well, if you're not self-employed, then you don't have self-employment tax, right? So what you do is you create some kind of a foreign entity, a company or whatever, and become an employee of the company, right? The company pays you, and then you don't have self-employment tax. But that said, but then you have to deal with the problem of the company. And there are a lot of problems with companies, okay? You have to create them. You're going to have to look out for them. You're going to have probably filing requirements, et cetera, et cetera, et cetera. But also, since 2017, we have the GILTI problem, which means that the only way to avoid the GILTI problem is basically to, pay out everything, just turn it into a pass-through, right? Okay.
Or you have, or now you're getting more complicated because then you have to create a U.S. corporation to send the money to. So I think the point is this, and I recall, a bit of what you've said in the past, John, is that you don't look at Social Security as a bottomless pit. You don't look at it that way. It's like, well, look, when you're paying, essentially when each year you're paying to create this a foreign corporation. Look, your tax prep bill is going to go up by $1,000 at least.
Much least, more than that.
At least. Well, I'm just thinking your simplest version. Doing it yourself, probably wrong. Realistically, it's probably going to be $2,000, $2,500 a year. I'll tell you this: that form will create a penalty exposure by filing things. Probably won't do anything wrong, but you're creating an obligation going forward, and that $2,000 you're paying is going to a black hole. There's no return on investment for that. So it is, so in order to reduce your Social Security contributions, it's a lot of work. Now, what I would say is maybe for somebody who has, hey, Anthony, I've worked my entire life, adult life, in the United States, and I've contributed so much to Social Security. I can't contribute anymore. I just don't want to really pay on principle. Okay, I could kind of see that, but you would just want to check what were your contributions, because your benefit is based, however, what Social Security going to do, I don't know, but your benefit is based on what you contribute. So you might want to just sort of take a look at the math before you try to go in. And
let's make it even simpler. Okay. And this is something that I actually feel fairly strongly about, even though, we rarely discuss it. It's this, but I understand and basically agree that, it's painful to pay into a system like Social Security, but I want to make a couple points here. The first is that Americans have no idea how lucrative Social Security is relative to equivalent programs in other countries. It is truly amazing. Plus the residual benefits, spousal benefits and stuff. I know, it really is unbelievable. Okay. what's going on here. And if you are, sort of digital nomadizing or whatever, and let's look at it this way. Let's say that the Social Security tax is $10,000 a year, and let's say the compliance cost for your corporation is $4,000. You're clearly wasting the money on the compliance, no question about that. But the point is that your contributions to Social Security, therefore, are only $6,000, right? You see what I'm saying here?
Yeah.
And I know this is not a popular opinion, and I know that most people vehemently disagree with me, but I think you're much better off just putting the money into the U.S. Social Security and see what happens, right? You've got to have 40 quarters or
40 quarters, right? That thank you, John. That's exactly, yeah. So, if you already paid in 40 quarters at the max, okay, there's really no benefit for you sending anything more to Social Security.
Well, but it's based on your higher earning years. But if you haven't, let's say you're somebody in your 20s, you're out of here 5 years, you're halfway there, right? And I don't know. Anyway, enough. I know everybody disagrees with me on this, but
Keith.
You made a statement to Anthony, maybe just to explain. You said after the 40 quarters, there's really no benefit in paying into Social Security.
Well, you're entitled to Social Security, but that doesn't speak to what your benefits are.
Right.
Well, your Social Security is based on your highest 40 quarters of contributions.
Right, but you need to have the entitlement to Social Security at all, right?
Right. Got it.
What I'm saying is this. That I understand completely the mindset of somebody in their 20s, okay, totally, because I thought the same way, right? But, there's that old Mark Twain saying, my father was 14, he was so ignorant I couldn't stand to have him.
I know.
By the time I was 21, I was amazed how much he'd learned.
I know. That's great.
Look, the point here is this, that if you're self-employed, you're going to have a problem anyway. You're either going to have to throw money into compliance to avoid the Social Security taxes, or what you're going to have to do is, pay into the Social Security. And, it's simpler to pay into the Social Security. Even if you never get anything, it's simpler. Okay, you're clearly throwing money at accountants and lawyers for no reason. That's the biggest waste of money I can imagine. Okay, even worse than paying into Social Security. And it's not, the way to view it is not the amount you're paying into Social Security. It's the difference between, I think, what you're paying in and what the compliance costs would be. And you're getting that 40 quarters, so at least you have entitlement to Social Security, right? But anyway, hey. Why am I preaching this? I have no idea. Let's move on. People do what they want.
They do what they want, right?
Well, the same thing I just said. Look, keep your life simple, okay? You get into these CFCs. Let me give you an example. I'll give you an example. Just somebody I was working with last week, okay? So this is somebody, who is running some kind of, I don't know, it reminds me of a yoga studio, but I don't know what it is. Anyway, outside the United States. Business partner, non-resident alien. They created, I don't know. They're using some kind of a UK something or other that under the US entity classification rules is default treated as a corporation. And so they pay the money to create it. I have no idea what compliance costs they have wherever they did, but now they're paying these accountants all this money. I mean, I don't know. It's a real headache, I think. Okay. But anyway, next. Canadian digital nomads. What do I have here? Oh, yeah, same thing. And not all is lost, Canadians. Not all is lost. If you're a tax resident of Canada, you're paying into the Canada pension plan. Of course, I think it's a joke compared to U.S. Social Security, but at least, there's something there.
John lives in Toronto. If you wonder why John is so Canada-centric, he lives in Toronto, and he really helps out a lot of U.S. Canadians.
Well, I also understand the brutality. I mean, I live in the epicenter of the most brutal tax administrations ever known to man.
You really do.
I mean,
Canada is
it's
not
really
great.
unbelievable, isn't it? I mean, I don't know how anybody can even survive this.
I do, I do. Hey, look, I do, IRS, and it's pretty terrible. It's terrifying. And then when I hear about Canadian things, I'm still like, wow, that's horrible.
The enforcement is 1,000 times more efficient than the IRS.
Oh, God, okay. Yeah. Oh my God. Yeah.
1,000 times more.
Yeah, exactly. Yeah.
You get love letters from them all the time. And by the way, one of the fascinating things about it is, we always talk about, green card holders coming back and they get these pensions from the U.S. and they're using foreign tax credits. Christ, the Canada Revenue Agency audits these damn things like routinely. So I mean, there's huge administrative costs of dealing with this stuff. Anyway, move on, please.
We're moving on.
I don't want to get upset.
Yeah.
All right. So, I think it's interesting to compare U.S. citizen digital nomads with whatever Canadian Brits, what have you, right? So what's really interesting here, now remember, there's a difference between being a tax resident and what you're being taxed on, right? So U.S. citizens are always tax residents, but they do have the opportunity, if they plan properly, to use the Foreign Earned Income Exclusion. Okay, which, other than the self-employment tax or whatever, is going to mitigate their U.S. taxation, right? Canadian residents, like I suspect that the vast majority of these people in their 20s just leave and fall off the radar. I mean, there's no reason they should know this stuff, but technically, it's very, very difficult to sever tax residency from Canada. Okay, and it's not, Professor Zelinsky just wrote this follow-up article about, the extolling the virtues of citizenship taxation. It's not because they're Canadian citizens. It's because they retain connections to Canada. Okay, that they're taxed. That's the point. Okay. Anyway, next. Practical advice.
There you go. Here we go. Yeah, I like this. Yeah.
Well, my view is that, I don't think a U.S. citizen should have any kind of financial account of any kind outside the United States. Simple. That is, if you're a digital nomad, the ones who aren't,
Yeah.
All you're doing is it's just one more damn thing to worry about. Okay.
Don't. Yeah. Yeah. If you're a digital nomad, avoid it.
Be careful.
And I know it's cool, right? I know it's cool to have a bank account in Switzerland. It's really cool, but or wherever it is. But
don't do it. Then you're gonna every year you're gonna have to think about whether you have to file an FBAR, and thinking about it is as bad as filing it. Okay. All right. So you don't want to do that.
Yep.
And the credit card thing again on the issue.
Oh yeah.
Back up here. I think probably you're defaulting into the credit cards you have in the U.S. or Canada. But what I would say is this. Okay. My view of this, for example, I was in Mexico at a conference last year, and my Canadian visa did not work. Okay, at a restaurant. This particular bank. I don't know why. All right, maybe it was because I was, they were seeing the charge from outside the country. I pulled out another card, and of course it worked. Right? You want, okay, I would say at least 5 credit cards, and you want them from different financial institutions. Okay, so that if one goes down, you've got the others. I mean, I'm not kidding, okay, about this, because, this may sound like only a theoretical problem. It is not. All right, I've had the experience. And by the way, it has nothing to do with the cachet associated with the credit card. I have experienced high-end, expensive American Express cards declined, by the American Express computers. I have, it's like there's no sparing on this. All right. So
it's happened to me. I concur with you.
What's that, Keith?
Range of cards. Okay.
Yeah.
All right.
And
what John's talking about, it's happened to me on a few occasions overseas.
Yeah. And this is not fun when it happens, okay? Because it never happens at a convenient time. But the other thing I would add is this, okay? That try to get credit cards, okay, that don't charge foreign exchange fees. All right. For example, I feel like I'm doing an ad right now, but
yeah, I know, right? Yeah.
In Canada, for example, there's a Bank of Nova Scotia passport that does not charge foreign exchange fees. They have a branded American Express card. There's a Home Trust card. There's Rogers MasterCard. Those are the three I know of. And these are the cards that you want to be using, all right, as a general principle, because, this stuff does add up. Plus, they're obviously contemplated more, based on, usage outside the country.
Yeah, right.
wanna
They're
do
not going to
that.
be. Yeah, they're not going to be a long. Oh, right. We expect you not to. Right, be in the country. That's a pretty good idea.
Yeah, and also on this very, very interesting, in certain parts of the world, not too many. I was in Buenos Aires about a year and a half ago for a week or so, and I don't know what you know about the currency issues there, but I mean, there's really a lot going on. So you also want to know, are you better off paying cash or with credit cards, et cetera. In certain parts of the world, of course, Argentina is one of them, and undoubtedly there are others. So remember, those of you who go to Argentina. By the way, Argentina you can get appointments to renounce U.S. citizenship fairly quickly.
Well,
I've had people go there, and I've always had the discussion with them about how to organize their money for the week that they're there. Okay, which is kind of a separate conversation. But the main point here is, okay, when I say 5 credit cards, and that may be too few, I mean with 5 different financial institutions. Okay, not, well, I've always used TD and I see they have 10 cards. Well, I'll take these 5, right?
yeah, right.
One
I
goes
got
down,
it. Yeah,
the
5
other.
different. Right.
Next.
I think we're at the end here, and this is really where
Yeah.
yeah, and I agree, keeping
Keep
it simple. Yeah, as simple as you can. And now this is sort of, we didn't talk about next week's topic, but I kind of want to go through it. I'm going to ask Keith some questions because, I kind of see more the issue of what we're dealing with right now. We're really dealing with, so, hey, look, some people could become digital nomads and that's it. They do their time. They come back to the US. Hey, I want to raise a family. And that was it. It was a fun experience they have. But again, people find true love. So Keith, here's the situation. I'm going to subscribe to you.
Okay.
Let's say that we have a digital nomad who goes to Argentina, and he ends up marrying an Argentinian, and he also has assets in the United States.
Okay.
A whole bunch of assets. They've been married 10, 15 years. They have a couple kids. He dies without a will, and he has U.S. property.
Right.
Have you ever heard of this problem?
I have heard of the problem, not when the person dies, but talking about it proactively on what should we do in the event if the American spouse dies with kids. I've heard about it that way.
That might be how we approach this because I'm sort of thinking about, hey, look, we have the digital nomads who don't have the issues that we normally talk about and the issues that we're requesting reform on.
Right.
And now I'm thinking of like, oh wow, when you have a U.S. spouse and a non-U.S. spouse, and actually, let's say either one of them has property in the U.S. Let's say the non-U.S. spouse owns property in the U.S.
Right.
dies without a will.
Well,
oh boy, now you have a massive problem and you have a massive tax bill.
You have a massive problem, and obviously, depending on the states, that massive problem might be a little massive or big massive. You know what I mean? Because each state has its own probate system that could be short or it could be very long.
Oh, and a huge when we talk about California has the worst probate system in the world.
Oh, does it? I thought New York
no, California is terrible. And that's really the reason why a lot of living trusts and irrevocable trusts are pushed because California's terrible. But other places like Texas aren't bad. They're pretty good. In Connecticut, it's not even all that bad. My friend's probate judge, so I think it's pretty good too. But I think really what we should talk about for our next topic is when you have, when you have not, a mixed marriage between U.S. and non-U.S. and there's assets in the U.S.
And here's where it gets complicated, Anthony.
Yeah.
Here's where it gets complicated. So you have the non-U.S. spouse and the U.S. spouse, okay? And they have kids. So are those kids, how do I put this? I'll do it the best way I can. Are those kids American? Meaning, has the U.S. spouse transmitted his citizenship to the kids, meaning he's met the criteria? number one. Number two, have those kids been registered as a birth abroad? Do you see what I mean?
Oh,
So
yeah.
there's different combinations there that have occurred. So if you have a kid that's American by all legal standpoint, but they've never recognized it, what happens there as well? Do you see what I mean? So
Yeah. Yeah.
it's almost like a mind mapping exercise to do this.
Yeah. All right. Well, I think we have our next topic for next week. John, does it sound good to you? We're going to be talking about mixed marriages and inheritances and dying. Sound good to you? And children, right? Mixed marriages and what it means.
Yeah, well, that's too much for one podcast. But
yeah, all right. We'll figure it out. We're going to narrow it down. So again, subscribe. So we're reaching to the end of this, and now this is what I want. I want to give a promotion to our great friends here, John Richardson. John Richardson helps a lot of people renounce, and if you're a Canadian citizen, he's the guy to go to. I really would recommend him because there's very few people understand the intricacies of Canada taxes and more than John. So I would really strongly recommend you going to him. And actually, if you're in another country too, John's fantastic. I would highly recommend him for your expatriation work. You could email him at, where's your email, John? I have it right here. That's on it.
And also, if you're giving up your green card the proper way, John's the person to go.
Yes. Yeah, there you go. Right. If you're going to agree, so we can reach out to him, CitizenshipSolutions@protonmail.com. We greatly appreciate the great John Richardson. Likewise, Keith Redmond. Keith has been helping people out on his group, which is now 11,600. Let me put the link up to your group here. Here you go. If you are married to a non-U.S. person, this is your support group. You can go here, join there. It's growing 11,700, right? I checked this morning, I think. Was that what it was, Keith?
Yeah, it's about 11,700. Yeah.
Great. Yeah. So great community. We get a lot of views from here. So thank you all for joining from there.
And I do work one-on-one with individuals.
And
options.
And that's where you might want to reach out to Keith because, you could deal with someone who understands the issues, not necessarily a U.S. tax professional and just says, oh, things are black and white and things are easy. Oh, just shut up and pay the taxes. But, Keith truly understands the human component. There's an understatement. So you could email him and he can talk to you about your issues if you just sort of want to dip your toe.
Yeah, but I just mitigate the fear so people can look at it with a critical eye to take a look at what their short-term and long-term strategy needs to be.
Yeah, and the fear does not make great decisions, and that's always the thing that I try. When we talk to people too, a lot of people do. You can, because if you are looking for us to do a streamlined disclosure, even your 2024 prep, you could reach out here to IRSMedic.com. Go here or just IRSMedic. We would love to help you out with that. We do a lot of the offshore disclosures, and we've done more penalty abatements than I think anything. So we do really enjoy the work, and we understand the issues as well. And again, we're not afraid of taking positions the tax industry doesn't approve of because we kind of know where they got their answers from. They misquoted me. So not just me, but a few others. The tax industry and many issues have misquoted things I've said and other people at the top of the game. And that's why we end up with a lot of things that don't make sense. So you can reach out there. And also, again, I would say, we have a lot of things going on in 2025, and we've never had this much attention and focus on our channel. We're picking up new subscribers and we really, really appreciate it. So please subscribe and like this video because we'll get a little bit more links. Subscribe because we always do go live. And some of our content is a little bit, eggheady, is designed maybe for the people with a little bit more interest in it. But then we do try to make things a little bit simpler so that you can kind of get the answers that you're looking for. So I really do, again, appreciate everyone joining us today. So with that, I'm going to say goodbye for the great John Richardson and the formidable Keith Redmond. This is Anthony Perrin of IRSMedic. Thanks so much for joining us today.